is it possible to add these limit LPs? And the answer is, of course, yes. It has to be built into it. This would still keep the game pretty similar to what it is today, but allow people to place these limit LPs inside the pool to be able to only buy or only sell. This is very helpful to people that are buying the token when it launches.
Scraping Bits is brought to you by the following sponsors. MEV Protocol. Maximize your ETH staking value with MEV ETH, exclusively on mev.io. And Composable. Execute any intent on any chain, coming soon to mantis.app. That's mantis.app. And Fastlane Labs, the only MEV and intent-centric team that has a daily deodorant application rate of over 68%. GM everyone, my name is Tagachi, the host of Scraping Bits, and today I'm with AlphaKey from Poolshark. How's it going, friend?
Going great. Last couple weeks have definitely been exciting. Lots of things going into Q2. So yeah, let's send it.
Let's send it. Up only. Just for the people that aren't familiar with you, who are you and what do you do?
Yeah, so my background is in software. I come from an infrastructure background. What is blockchain ultimately but a distributed system? So, that's what I've worked on in the past. And coming into the space, I was really interested in watching kind of what the large wallets were doing and using that as a way to get a general sense of where the market was headed. So early 2021, when we're kind of starting to hit peak bull, I'm looking at Glassnode Analytics. I'm starting to use a platform called 3 Commas to do like some really advanced automated trading. They have like really nice, like for example, trailing take profit. You got a lagging take profit. The price is 2% from the peak. So trying out really cool stuff like that, using other people's strategies, which are, pretty diversified in terms of opening trades and coming on chain. I'm looking for a similar thing. I'm looking for how can I set both take profit and the stop loss at the same time? What's the best way to do that? And it wasn't very clear. Like early 2021, the only thing we had was yield farms. And I know you had mentioned like that's definitely something that you've messed around in the past with too. So, I'm messing around with those and I'm like, hey, I wake up in the morning and my LP position is down like, 40%. I'm getting additional losses from permanent loss. Like, how can I stop this? And because I know I'm not the only person that's having this problem.
Definitely, yeah.
So this was what like really intrigued me. And I explicitly remember the release, the day when they announced like what Uniswap V3 was going to be. It's like, okay, this seems interesting, but these are not the problems that I am interested in solving right now. So then began kind of the 2-year journey of me trying to figure out like, how was I going to make things easier for myself in terms of taking profit, limiting losses, stuff like that, and doing it in a way that really jives with what AMMs look like today.
Oh, I totally agree with the, wanting to do something for yourself and then creating something out of that. I think all problems kind of stem from that. It's like, oh, I want to do this thing, but there's no solutions. Let me make the solution and then productize it, commercialize it for other people. But before we get into all of that, how did you get into all of this stuff? What were you doing before crypto? How did you kind of onboard into crypto and get to the place where you are now with Poolshark?
Yeah, so I mean, even before 2021, I was always very interested in trading and just the psychology of it. And like, how do I zoom out and make very calculated decisions about like where the market is heading? Like, I think of it very simple in terms of, is the market going up or is it going down?
Yeah, I know.
In terms of the time frame that I'm looking at, right? And there's very simple like higher high, higher low pattern that you can use to determine like, is it going up? Is it going down? And that's really like what you should care about in a general sense. So zooming out, you can on like almost any chart, like you can very easily see the bigger picture and what's happening. It's very hard to make decisions on even like a week to week basis.
Yeah.
I like to see like 1 month, 3 months, candles, stuff like that. And so I started trading back in like 2016, 2017, and I was actually following the Canadian cannabis legalization and all the stocks that were coming out of that, and just watching how that shaped. There's licenses, obviously in crypto, you had like the bit license and other stuff, other regulatory barriers, right? And if it's the government that's giving out these licenses, then they pick very specific companies in that, and things get stretched to the upside because people get on this crazy euphoria about what the market size is going to be like. So I think when we see things stretched to the upside, people overestimate the market size. And then once that reality starts to set in, that's when you see the pullback. And so I'm very interested in these emerging markets and how the psychology develops. And I see a lot of parallels between, what I was investing in 2016 and 2017 and what crypto looks like today. But crypto, it's like more on a hyper spectrum. But even in weed stocks, for lack of a better term, you still have like these like crazy like pink sheet scammy stocks. It's not to the level of that exists in the spectrum that exists in crypto. But it's funny, like in the bear market, that all of our cryptos get beat on by regulators. They don't come in during the bull. They don't stress anybody's bags during the bull. But then when people start losing money, that's when they come in. They're like, "Oh, we're the good guys. We're the Batman, the Robin, the Superman that's going to save everybody." But they don't. When everybody's making money and everything's good, they don't do anything.
They must be
it's very interesting.
They must be in the bull market with us.
This is something that it's not, like I said, it's not just specific to crypto. This also happened with cannabis stocks as well. Even you had senators, U.S. senators, holding these cannabis stocks like during the sort of euphoric phase. And you see the same thing with crypto, right? Some of these politicians have bags, like they're starting to speak out against the Gary Genslers of the world and say, hey, we should be protecting investors, not making Americans like less competitive, basically.
So you got into Poolshark specifically because of you wanting to do more of your liquidity, right? What about a more elaborate story? How did you really decide on, I want to make this something everyone can use and not just myself?
At the start, I was very naive about what the solution would be, right? Like I thought to myself, okay, well, the loss happens when the price diverges. So what if, if the yield if the impermanent loss goes to be more than the yield, I just pull the liquidity or something like that. Obviously, that's a very naive solution because that's not going to work for projects that are bootstrapping their own liquidity. They need ways to play both sides of the spectrum to be able to buy low and sell high, and kind of do that in the same format that they're providing liquidity today, and just make it very understandable. So, just having these different tools in your kit. And Poolshark, it's really about like expanding that surface area of what a liquidity position can be or represent or do at the smart contract level.
Right. So what can it really do then at the smart contract level?
I think the idea is that we introduced, so the paper was released in January 23.
Right.
And basically I went and I did a bunch of research to see historically, like, has anybody thought about what I'm trying to do, which is instead of sticking tokens in a pool and saying you can trade from ETH to DAI and DAI to ETH, what if it's just one way? And I saw that, the old post that Vitalik made about using prediction markets for decentralized exchanges, someone had pointed this out. It's like, well, you could also just have an or. So instead of it being an and, which is like, Uniswap, Curve, Balancer, etc., it could be an or. And what that allows you to do is capture one side, especially when it's a really volatile asset. You're not wanting to sit there and have to rely on some off-chain system, or not everybody. The point of the value add of crypto is not having to run your own infrastructure to do things.
Yeah.
So, and the efficiency with which you're able to do that with the smart contracts that Poolshark provides is a lot greater, especially as the asset becomes more volatile. You want to distribute a buy or a sell over some range. You get a lot of efficiency gains. Otherwise, you'd have to do some silly like within each price tick spacing, let's say it's 0.1% or 0.3%. Now I have to stick an LP there for each spacing, and then I have to remove it after so many spacings. So it just gets very hard to manage that. Even with what Uniswap v4 will provide on paper today, you'll not be able to do those things because that position only supports trading two ways. It doesn't support trading one way, which someone would want to do if they didn't have the off-chain infrastructure. So, we're trying to go to new chains because those new chains don't have infrastructure. They don't have DEX aggregators. They don't have some RFQ system or something like that. And we could just deploy our smart contracts over there and boom, like users can not only provide this two-way liquidity, but they can also provide this one-way liquidity in the same pool. So, we're not saying that because we're introducing one-way liquidity that, oh, no, this is the only way to provide liquidity. Some people have mistakenly thought that. They're like, oh, so you're back to a limit order book. And it's like, no. This is just expanding what's already there and making more things possible that weren't possible or were less efficient before. And, this is just how I think. Like, I am not chasing after like the new next hot narrative, right?
Yeah.
Nobody has been able to replicate or mimic what we have done. And it's because it's not something that's like, I'm going to go make an L2 that has native yields, right? And I'm going to raise a bunch of money for that. And, I have friends that are doing that. That's great. I'm very specifically focused on following my own rabbit trail and letting that lead me to more things. And what I've learned, so like the value of doing that stuff was getting really deep in the mindset of, well, what isn't there? Like, what are the tools that people should have to be able to manage their own liquidity? Because theoretically, if you can buy low and sell high, stick that in the pool, right? It's going to cross this price, boom. Then you can just stack your liquidity position. You can just take those profits, rinse and repeat. And for me, it's about building a platform that makes it pushes you one step closer, right? If
100%.
if the platforms that exist today didn't push you as someone who's launching a token, because like at the end of the day, what are you like really trying to sell as someone who's a decentralized exchange? You're trying to get somebody to launch their own token.
Yeah.
So what all these AMMs are doing, and they don't know it. Some of them maybe do, some of them maybe don't, is they're creating a product funnel, right? The thing is, today it's a very incomplete product funnel. I go to Uniswap and all I can do is launch a liquidity pool. What if, for example, I want to do some of the stuff that people are doing today, like they're launching an LBP, which is a liquidity bootstrapping pool, right? To get initial liquidity for the token, then you're missing that component. So like you're just trying, like if you just think about like I go to Uniswap and I just launched X times Y equals K pool and that's it. That's not a product. That is like a one stop. The buck ends there.
Yeah.
Basically, right? Like I just create my liquidity pool. You force me into X times Y equals K club, and I'm done. Yeah. Right? I go to Balancer. Now you put me in the 80-20 club, I'm done, right? That's it. You're not trying to sell me any additional products because ultimately any additional products that you would create, ideally the revenue from said products would go back to a DAO. And obviously we're going to start seeing that wave of protocol revenue being shared if Uniswap actually goes through with turning on the protocol fee switch, which I think is exciting for the entire space.
Yeah.
Even if you don't like Uniswap, you at least have to applaud the fact that they followed through with trying to find a pathway there to be able to deliver that. So, which I think is huge for the space. And so really it's like, how can you create more products? Obviously, Uniswap having such a large market share, they really only had to create one product for that to work. But obviously, there can be more products that are created around that funnel of getting people to launch their own token. And it gets interesting when you really dive into the data, right? So if you go and you look at like, what are people actually doing when they go and, the volume that happens on ETH mainnet on Uniswap today, what is the intention or what's the driving force there, right? And it's interestingly, 80-something% of the volume is going from ETH through the ETH USDC pair into a third token. So people are buying these other tokens, maybe they're something exotic, and then they're kind of, going back and forth through the ETH USDC pair to get to those third tokens or to get to that third token. So it's saying that like, people are there because they do want the specific unique tokens that exist there with the liquidity that's there. And that's where a lot of the volume comes from. Obviously, probably a good chunk of that is arbitrage that's being played between different liquidity pools, between centralized exchanges and other liquidity sources. It definitely, there is a demand for new tokens, specifically ones that have good narratives behind them. Maybe you can mention a couple, but obviously like Celestia is probably one that comes to mind. What are some other token launches you think that have been pretty exciting recently?
I'm not actually too big into the token launching game anymore. Surprisingly, not really. I'm more of like infrastructure now, of just the general gist of the market. I think in able to capture everything, you must make tools for people to use and create infrastructure, because now you capture everything instead of being specialized in a single thing. But I did also think of this bi-directional liquidity before in a past life, like a couple of years ago when I was doing these AMMs. I always had the idea of, I don't want to supply this shitcoin plus my ETH. I don't want to swap my ETH into a shitcoin, but I still want to provide liquidity because I believe right now is a hot topic, and I want to get the fees on that. Although I don't want to swap into it because now I'm, giving myself risk into this new token that just launched, which I don't actually believe in, first of all. But I do believe the trend is there and there's a lot of volume going into it. And it can be like any shitcoin, like Pepe, for example. You know how Jared from Subway was doing, I don't know how much money, but maybe millions. He was holding like a couple 100,000. And, that would have been a good opportunity, right? But I didn't want to go into a shitcoin and get dumped on later on by someone that got more infrastructure to front run and beat me into these different kind of games. I would just get wrecked later on because I'm not as well equipped. I do think there's a lot of people holding a lot of ETH because they believe in the long-term value, of course, but they want to also provide value and not become exit liquidity. So I have a question, like how did you actually architect this so that people can provide single-side liquidity and the liquidity pool is not getting adjusted to a completely different price? Or maybe you are doing that. How are you doing it?
Yeah. So effectively how it works is you say that like, hey, I want to put my limit LP at this price. If you can get filled, let's say you say, I want to sell my ETH for 1,500, right? It actually does not let you. So it combines the superpowers, if you will, of swapping and LPing. If you can get the price that you want, it fills you like a normal swap. If there's some left over, some of your input tokens still left over, then it makes a limit LP position for you at the best price available. So even if you try to sell at 1,500, it won't let you. If there's any left over, it literally sticks it right at like wherever the market price is, right next to that, so that you get filled as quickly as possible. That's how the placement of the position works. And I think we're going to probably see more people adopt this over time. They certainly have, like, it just as it proliferates and more people see it, then they see the value of it. Then beyond that, when you actually go to claim the position, you pass a claim tick, and you say, hey, I've been filled up to this price. So let's say you have you're selling ETH from $3,000 to $4,000, and you went to an island and came back and it got filled 100%.
Yeah.
Right. So you got filled up to $4,000. So then you pass the last tick of your position, and then it's like, hey, the price has crossed this tick since you created your position.
Yep.
Because basically, if you were able to recreate a position, it means that the price was there. And let's say the epoch is basically this counter, right? It's a clock, if you will. And let's say it was 6. So then if at the end of your range, there's a number greater than 6, we know that that was crossed since you created your position. And that's effectively how the whole system works. So we basically, every time we cross a tick, we mark, if there's a limit tick there, we mark a number, and that number tells you when you go to claim if it's been crossed.
Interesting. So, interesting. My original design for this kind of single, I guess, sided liquidity is, if this was all done in a smart contract, and is this more of an order book of what you're saying? Is it more off-chain or on-chain?
Nope, it's all on-chain, and it's all AMM.
Interesting. So my initial design when I was first thinking of this, I guess, like single-sided liquidity, is if I'm providing X amount of ETH and there's N amount of, let's say, shitcoin, if I'm providing, from ranges, 1,500 to 1,600, and I've just been sitting in there for, let's say, like, I don't know, 1 week. Someone else with more money than me can come in and dilute me. So there must be some time factor. And I heard you talking about that time factor. Oh, was it actually a time factor that was taken into account? Or anyway.
Okay, so it's only the pool price. The pool price is just crossing your range, right? So let's say you cross into, you said 1,500 to 1,600.
Yeah.
Are you on the buy side? You're buying ETH, right?
Right.
Okay. So it crosses, let's say 1,550. Now someone comes and the price moves back up above 1,600. Someone comes and undercuts you. Then we save the epoch on that tick, and like it's a very specific, like, so whatever tick, let's say the 50, right? We check the tick ahead, that's not been crossed. We check the one before, that one has been crossed. Or sorry, the one on 1,550, that one's been crossed. The one ahead has not been. So it's a very specific way to determine whether you've crossed in or not. As far as someone coming in and diluting you, that can only happen if you're partially through a tick spacing. Someone can come and they can undercut you. And the specific problem here is you can't have like infinite ticks to cross. So let's take one spacing. So, $1 to $1.10 basis points, or, like 1.001, right? We cross that range partially. Now someone comes and they undercut. We cross it partially again. We undercut again, right? Now if you don't converge those partial fills, you end up with infinite ticks to cross. So you can't do that.
How do you actually count? So if you're providing liquidity from 1,500 to 1,600, and I'm a bigger player with, let's say, like 50% more liquidity that I want to sell that someone else can buy, what happens if I come in at the exact same time, or versus, let's say 2 blocks later? How does it work? How do I not dilute you? Are you in priority, or what happens?
Yeah, there is no time priority, right?
Okay.
So it just like any other liquidity position, it just adds more liquidity in that range. And it does not, like, if you undercut somebody to the exact same tick, or you can't, if you undercut, it will just save that partial fill. So there's this concept of half ticks where you have a partially crossed tick. So like in the smart contracts, five is actually a valid claim tick. It's not a valid tick to add liquidity on, but it's a valid claim tick because you could have partially crossed the range. So but you can't add liquidity to tick 5, but you can claim on that because you crossed a partial spacing.
Interesting. Is this bidirectional pools also what you mentioned on your landing page as cover pools and limit pools?
Yeah, so the limit pools would represent like a limit order, obviously, like price goes up and you're selling. That is the cover pools are much like those have been written and audited. However, the main issue in pushing that out is the fragmentation,
right?
Because basically the end goal should be to have your bootstrapped LP, so your two-way bidirectional, the limit orders and the stop orders all in the same pool. That should be what the product is. When you split it out, you have problems with aggregators and keeping the pool in sync, all that kind of stuff. There's too many problems when you split that pool out. Right. Like I said, because of fragmentation, keeping the stop loss pool in sync, I think it's too difficult, and better just to put it all in one pool. Obviously, this is following the theory of like we're going to improve efficiency over time, and therefore this extra functionality will provide value that users are looking for to exist within these AMM pools. And I've definitely talked to a lot of people that have had real problems with execution when it comes to the sort of off-chain limit orders that exist. Originally were popularized via Gelato, Chainlink keepers, other types of keepers. And the reason is because you're still doing it's still a market order.
Yeah.
It's a conditional market order that you're doing. It's not a limit order where it's sitting in the book, which in this case would be it sitting in the liquidity pool.
Yeah. You have different market orders. You have like market swap and limit swap, and it's basically interacting with that.
Exactly. Yeah, of course, market, you have to protect the user's exchange rate. Their exchange rate, maybe they're swapping USDC to USDT. They say, okay, it's 1-to-1. I'll take a 0.3% cut. And if the exchange rate's worse than that, then obviously you revert. With limit swaps, you essentially get the best of both worlds in terms of if the liquidity that you need is available, you get it right away. If it's not, it chucks a position for you in the pool and you only send one transaction. The UX of that was introduced with Uniswap v3, obviously just even being able to do these range orders was a huge upgrade. But you can't do range orders near market price because you're going to send, let's say, 100% of one side, and then you get on chain, and now it's crossed into your range, so it reverts, right? And so with this, you don't have that problem, because if you can get a better price than what you had intended to, it just fills you. If you can't get the price you want, then it sticks the LP there for you at the best price available. So you get the best of both worlds. And like I said, you just walk away, right? I want to buy this new coin that just launched for $1.50. I send my I say I want $1.50. I send it. Either I get that. If it's way better than that, I get that rate, right? If it's not, then it sits in the pool. You do one transaction, you walk away. And there's no good way to do this with a two-way position. It's impossible. It's not impossible. You could. It just wouldn't be ideal because the trade would revert on you. The trade could reverse on you.
When we think about providing liquidity, let's say it's normal Uniswap XY equals K. If I provide, 1,000, let's say 100 ETH realistically, to the pool in like ETH share, if I provide 100 ETH only, how does the pool adjust to that? So if you have, XY equals K, Uniswap pool, traditional standard LP, I provide just single side liquidity of 100 ETH, how does it adjust? How does the price impacted? What is the liquidity like? How does all that look like?
Yeah, so are we? You said traditional Uniswap pool. Are you talking about the version 2 or
like V2,
version 3?
any of them.
Okay. So being that the limit LP is a range bound position, without adding that additional functionality, you wouldn't be able to do this. So you would still be able to, like, if I essentially think of these different liquidity pools, like let's take a Uniswap V2, Uniswap V3, they're different games with different rules, right? So in V2, you can only provide full range liquidity, correct? So it's basically impossible for you to just put in one side. Agreed? I don't know if can you still hear me okay?
Oh, I don't know what. Okay, I think it's better. But yeah, one side. If it's just an XY equals K pool, then yeah, I don't think it is possible. But you must have designed something else that allows it to adjust the single side liquidity provision, right? Because that's what I was thinking.
So,
if you're doing like traditional LPs, it wouldn't work because like where would you put it?
Right. So this is range bound. The limit LP is range bound. You say I want to sell ETH from $3,000 to $4,000, and so it does build off of the model from that was introduced in Uniswap v3. You could put these limit LPs on top of a Uniswap v2 style pool, right? What we would call like classic liquidity. You absolutely could. However, like I'm probably one of the few people that would be the right person to do that. So I can do it. If people come to me and they say, this is what we want, I'll do it. So it can be done. We can make, I don't know, maybe you didn't catch this before, but I said Uniswap v2 and v3 are essentially different games with different rules.
Yeah.
Right? So in the v2, the rules are you have to go full range. Everybody has to go full range, right?
Yeah.
In v3, everyone gets to select their range, but then some people can earn more fees pro rata than other people, or with their liquidity because it's more concentrated. And you also need other off-chain systems, for example, easy auto compounding, easy rebalancing. The stuff that these ALMs provide is very high value to these V3 style positions, and definitely something that I think should be given more attention, because we're definitely not moving away from range bound or the range liquidity. So yeah, it definitely can be built on top of any liquidity style, and pretty much that's what I intend to do, is just like keep taking these other types of things. So I'd mentioned a liquidity bootstrapping pool. Why not take that and then allow people to put these limit LPs inside of there, right? And so, when people are doing their liquidity bootstrapping pool, people can come in and set limit orders inside of the pool. That's huge. That's huge to be able to do that natively on the AMM. So basically, the goal is to take all these liquidity styles that are out there, 80-20, invariant curve, et cetera, and add this feature into there. Yes. So with the V2 style pools, of course, we'd have to implement these features into that pool. As I had mentioned before, V2 style liquidity, V style liquidity, they're essentially different games with different rules, right? So the rules with V2 is like everybody provide full range liquidity. With V3, you get to select your range. And of course, that comes with a bit more complication to how the game is played, right? It's not clear where is the liquidity being provided and stuff like that. So people tend to prefer the V2 style game because it's more simple. And so it's entirely possible for us to, these features we've added on top of the V3 style liquidity, to be able to add those features into a V2 style pool. That is entirely possible, and definitely something that might be interesting later down the line, where I think the next product for us is definitely this idea of liquidity bootstrapping pool. I've talked to multiple people that have said like, yeah, that's definitely like an underserved market. And I think you had mentioned working on launch pads before. And I think, and
I don't know if you feel the same, but I feel like the incentive alignment, if you're building a product, like your whole product is just a launch pad, you're essentially incentivized to launch more tokens, get people buying into these bigger sales, and that requires very direct and focused marketing versus like just being a neutral platform that says like, hey, here's all the liquidity bootstrapping pools that are active right now, and just being completely neutral and hands off about it. So I feel like that's the right way to do it. I think incentives get out of alignment when people are actually profiting. Like the same people that are doing the marketing are profiting off of those, at least directly, if it's like a central party that's doing that.
Okay, Uniswap pools.
Right. So in the V2 game, everyone is a full range LP. There's auto compounding of fees, right? And it's pretty simple for bull swappers and LPs. In the V3 game, it's still pretty simple for swappers, although they do have to pay more gas fees for crossing price ticks, and LPs also choose ranges, which is you need more guidance for users that are not sure what range to pick and what's going to be best for them. So effectively, you were asking the question of like with the V2 game, is it possible to add these limit LPs? And the answer is, of course, yes. It has to be built into it. However, they can definitely be put there, and this would still keep the game pretty similar to what it is today, but allow people to, be able to place these limit LPs inside the pool to be able to buy or only sell. And so this is very helpful to people that are buying the token when it launches, making their job easier. It's so hard. Like when you buy a token and you set like 500% slippage or something crazy like that to get in, and your transaction still fails, or if it doesn't fail, you end up buying the top, and it's just a poor experience, right? So like if you could come in saying like, hey, I'm willing to pay this price maximum, or provide a range, or however it is you want to do it, it would be much easier to get the exact price that you want. And if you can't get the price you want, then you're out, right? Because that's how trading works. You get the entry that you want, and then you get your profits, or you don't get what you want, and then you're like, hey, well, better luck next time. Hopefully I get filled next time. So yeah, having that feature inside of those pools, I think, is super, super helpful. And the key thing to me is like not changing things too much from how they are today, so that we can test features in isolation, and we're not like, adding too much to the recipe to shift things too much. So I think that'd be a really interesting experiment to run. I had mentioned it earlier in the podcast, but a product that we're really focused on right now that I feel is kind of a good, in sales, there's this term called loss leader. And effectively, someone walks in your grocery store and you price something very low that a lot of people want. And that gets them in the door into buying a bunch of other stuff in the store. So, I'm kind of thinking of like, okay, it's really like a product funnel. And like, what are all the things that you need to get started, to make decisions about, like, where should I provide liquidity? How much should I provide? Stuff like that, right? I think those are missing pieces to the experience that people have to figure out themselves right now. And then, like, okay, once they bootstrap liquidity for their token, what next? What's the next thing I should do, right? So I think that giving people a better guidance in that whole process is something that's really missing, and something that I feel like we should focus on. And again, I touched on it earlier that we noticed users were adding liquidity for stables in whatever range that we set, right? They weren't changing whatever the defaults were. So that guidance, I think, is really important to the end result of the user experience. And the end result should be like, hey, how do they effectively manage their liquidity? How do they continually grow their stack, so to speak? And, you know, to me, this circles back to the ultimate value add of what the good that crypto can do for society, which is to help redistribute wealth, right? Make it
Yeah.
easier for people to, that's the easiest way to onboard people, right? We've
Yeah.
got all
Yeah.
these airdrops, and those airdrops onboard potentially onboard people. I think in a decent amount of cases do, right?
Mm.
And then they start using all these other products. So I think the cost barrier to acquiring people is not really so much in getting them to use crypto. But yeah, then to me, it's like, what are the other things that you can provide them, and how can you keep them alive in the game, so to speak?
What do you think the future of AMMs are going to be like? I know a lot of people are creating some order books like Espresso, I think, and Aori, and they're trying to get rid of these AMMs basically. What do you see? I guess as as the order books come in, people are going to be solving instead of doing MEV. I guess it is kind of MEV in a way, different kind of MEV. What do you see happening, and do you think AMMs are going to stay? Do you think order books are going to come and overtake everything, and it's not going to be on chain anymore?
Well, I mean, it basically circles back to the liquidity provider, right? Where is the liquidity? If people that are newer to market making, choose or like don't want to have some complicated system, choose an automated market maker, then that's where the activity is going to go. If people choose
Right.
to provide liquidity in order books, that's where the activity is going to go. So
Right.
I think that's what it pretty much comes down to. Ultimately, if you want to onboard the largest number of people into creating their own tokens, you're going to have to do an AMM. Like, you're not going to have people paying market makers to
Right.
market
Yeah.
make on an order book. I have seen on this front, like on Solana, there's an order book called Phoenix or Phoenix Labs. I don't know what the protocol might be called something different, but they essentially have automated strategies on top of an order book, trying to kind of provide the value that an AMM provides in making it easy to have continuous liquidity on top of an order book. So there are efforts, and it's all, comes back to, can I get the same experience that an AMM provides me on an order book? And I think if
Mm,
they can, then I think you have an argument there. So I I think really it's just about but here's the thing. Those off-chain order books do not provide sequencer revenue, you know. I think there's definitely something there, and you need extra infrastructure for that, right? So I think I said this earlier, like the value of Web3 is that developers don't need to set up their own infrastructure, right? So being able to go to all these chains and launch something very quickly and get things bootstrapped quickly. The easiest way, of course, is to do that on chain, not to have some off chain system or rely on other people. But so I think there's definitely a balance to be struck there. The founder of Aori has said that AMMs are scams, and like, to the extent that people don't understand what they're getting into, yes. Like,
mm,
if somebody is telling you that, like, hey, capital efficiency wise, an AMM is better, that would be incorrect, right? But it's easier for a larger number of people to use an AMM if they can do the things that they need to do with an order book. But then, we still haven't seen, like, I think maybe Hyperliquid is one of the more larger usage with an order book on top of it. I don't know that everything is recorded on chain or how much of it is recorded on chain. I'd be interested to know more there. But yeah, I mean, I think reasonable to say, like, all right, well, order books are already the most capital efficient solution. Why don't we just stick building on that?
yeah.
And I mean, I think, people go to a new chain, and we still see hundreds of millions of dollars going into AMMs,
Oh
not
yeah.
as much money going into order books. So sure, like, if you're building your own, you're building all the infrastructure and all that stuff, cool. If you're not building your own infrastructure, then you're probably going to select an AMM. We never
That makes
in
sense.
history have had so many people trying to provide liquidity, whether it's $100, $1,000, 10,000, 100,000, right? We've never had such a wide range of people providing two-way continuous liquidity in the way that they have ever, right? On order books today, like you go on a stock exchange, what moves the market is the market orders that come in, and then the market makers are just sitting there pushing and pulling their limit orders to
Yeah.
adjust to the market demand, right? So we've never seen the average human being be incentivized to provide liquidity, one, and two, be willing to do that. And it's just hard, you're gonna give your token liquidity over to a market maker and you're going to trust them to manage the price of your token. It's also not clear. Like, it's not clear, it's not transparent. The system can shut off, stuff like that. And also, it doesn't scale in terms of transaction costs and that, right? The beauty about an AMM is that I can tap it, right? And I say, I want to swap to this price, and boom, all liquidity comes out. I don't have to shuffle through all of these orders and iterate through all of them, which that does not scale, at least as efficiently as an AMM where everything is pro rata. So ultimately, I think strengths and weaknesses. So that's my take on order books versus AMMs. I have actually tried to build an on-chain order book myself, and by having these, like, basically a queue. So like in Kafka, you have like a queue of messages and you're reading bytes
Hmm.
from a stream, and you just increment this slider to say like, okay, I've read, 100 kilobytes or something. So I was
Yeah.
trying to do the same thing where I said, okay, these people have priced it. Maybe you and I all both price our tokens at $1. And if someone comes and takes 100, it moves the slider to 100. And then you and I come in and claim, and the slider will tell us if our order's been filled or not. So I've
Hmm.
experimented with that stuff and trying to figure out how to make it more efficient. Probably there's some uh, gains to be had through doing, like ZK computation off chain and stuff like that.
Hmm.
Definitely could be of value. But I think, in terms of like the solutions that are on the market today, it is very cool to see, like I said, stuff like Hyperliquid. Don't don't take my advice for using that, because like I'm not educated in like how secure is that and all that stuff. And um, but just examples of like user experiences, right? I'm thinking in terms of user experiences that are really cool
Hmm.
and allow me to move my funds via crypto wallet.
Yeah, I guess the biggest thing is if someone wanted to launch a token, how easy is it to actually create this market rather than solving to move these orders in the market? You want creators to come on, and that's the main thing, because that's how you create a market for, I guess, order books to even come on to, right? So that makes sense. If you're trying to optimize for people to come in and actually create the market, that makes sense. From, I guess, moving it. Maybe I have a different perception of order books, but
There's
that's at
there's
least.
also there's also like latency too, right? Like, being like co-located and stuff like that, to where the RPC is and all of that stuff. And you just have the problem of latency of like, okay, you read something from the chain, now you want to do something. It all circles back to these same problems of just delayed execution.
Just as a as a final question before we finish, if you were to restart your career, would you pursue anything differently, or do you have any advice for people going through their careers now? Is there any impactful mistakes you did that people might not have gone through yet that you wish you didn't hit?
Yeah, so I think my answer there would be like, follow whatever is driving your intuition, your curiosity. I think that's really what this space is all about. Is there's so many different areas to tap into in this space, and find your little niche or focus or a unique sort of skill set.
Yep.
Definitely some area that I'm very interested in L2 infrastructure
Right.
and improving security and outcomes there. Like that's definitely something I'm very interested in. Just scalability in general, right? Like I
Yeah.
very much want the tech as it stands today to reach people that are only willing to pay maybe, a couple cents or sub cents or whatever it is for a transaction. Like I think that's definitely one of the major uh, goals slash things that I have in mind while I do all this stuff. And that's really what I would say. But do think like my advice is like do things in the way that you enjoy what you're doing. It would suck to put years into something just to be miserable or just not enjoying what you're doing. So like don't
Mm.
don't look at other people and say like, oh, because this person has more money because they have XYZ, or this was easier for them, that you need to go through that same journey. Like everybody has their own little journey that they're going through, and just embrace that. Embrace
Yeah.
the challenges that you face and exactly where you're at, and don't envy the people that have more than you, because those once those people get what they want, they will stop. That's how it works.
Mm.
Is you set this goal, you're like, okay, I'm going to go and go and go until I hit this point, right? It's a self-fulfilling prophecy of, if you get to that goal and you feel like there's nothing else for you to fulfill yourself with,
Mm.
then you end up not working as hard or pushing as hard as you did before the goal. So everybody, once they reach a certain goal, there's always a next thing. And should I also answer the question of what I
Yeah.
think like the future of AMMs looks like?
Yeah. Yeah.
Okay. So I think essentially what you're going to have is you're going to have, for every protocol, you're going to have a canonical version, right, of something. So, and then you're going to have a version that is customizable. And why? Why would you do that, right? The canonical version is so that you can have something which is repeatable, very consistent. And this is, I think, something that has been done to date really well with like lending pools, liquidity pools. Is like, like when you launch a balancer pool or an Aave pool, you know exactly what you're getting. And I think
Mm.
that is very important. I think we should not, move away from that. And then there'll also be a customizable version, right? With like we're starting to see the introduction of developer hooks into more
Yeah.
protocols.
V4.
And that exactly, that will be very necessary to allow experimentation and customizability. And that experimentation will then produce a feedback loop back into the canonical version, which
Mm.
people know exactly what they're getting. So the developer hook thing, and this is just my opinion, should not be the end goal or the end result, but it is a part of the feedback loop to circle back into, well, what's the next thing? How can we ship the best canonical version of said DeFi protocol, or whatever type of protocol it is?
Mm. Interesting. Yeah, I think it's a very essential thing, having the experimentation of dynamic custom user pools and something like V4. Although it brings a lot more vulnerabilities, just like how like you can have custom tokens and LPs, and there was a whole game of LP sniping, and the person creating the LP would scam, and it was like, okay, you're first and all that stuff. I think it'll be the same as exchanges, as in like an exchange is actually a scam exchange, and you have to kind of understand that specific one, which will be different to every single one, or it might have like a little caveat, maybe a replica, but just a little caveat that you might not see. I think that will 100% happen, but there's always good and bad in any new invention, and I think to have the new experimentation, anything that anything that's cool that arises will be, I guess, used as a stepping stone to make new things. So I think having that is quite a good dynamic, even though it would bring bad stuff, but of course, good and bad. But man, I really appreciate you coming on, AlphaKey. I'm very excited to see how Poolshark evolves and also how the crypto space evolves as well with AMMs, and who knows what happens with AMMs versus order books. Maybe they work and coexistent, but some people are trying to get rid of them. So I wonder to see how it'll go in the future. And I'm sure we'll talk again in the future as well once it's all evolved. But man, thank you so much for coming on. I really appreciate your time, and I'm sure a lot of people listening also do the same. But yeah, until next time, man.
Likewise. See you guys.
Take care.